Just 6 points away from the 23,000 mark. That's how close we got to that level.
You know, the ring of an all-time high, frankly, it doesn't matter that if you get to hear the ring again and again, but it's a ring which is always a very special ring.
Yeah.
And yesterday, I guess there is just one word which in a sense captures the entire market action. And that one word is short covering. If I use a phrase, well, better late than never. That is what foreign institutional investors essentially decided to do. There was a massive, major, and there was a real big bout of short covering fueled by RBI dividend and then cemented by on-ground reality as to what is changing in the way how the election cycle would move. That prompted a big and a mighty bout of short covering. We'll talk about it, but I just wanted to start the show, or we wanted to just start this to establishing that yesterday it was like a, I won't use the word magical Thursday, but it was a Thursday which really saw the stakes changing from extreme short to reversal of that short.
Yeah, some addition of longs as well. But like Nikunj said, we'll focus on that because it was not just the Nifty, the Sensex, the mid-cap index, all of them managed to hit an all-time high for themselves. But very quickly onto the global screen, because as you can see on your screens right now, once again, the Nifty implied open is indicating a very, very quiet start. Wall Street definitely took a little bit of a breather overnight from those gains that they've been setting on. Of course, Nvidia did see a follow-through move yesterday as well. The stock was a buzzer, over a 9% tear that it saw in addition to its post-earnings reaction. Boeing, however, fell about 7.5%. Policymakers throughout the board, they continue to voice inflation concerns, and that's exactly what we heard from the Fed minutes as well. And yeah, Dow managed to post its worst session since about March 2023. So just to give you a color on how the global street went and how Asia is actually taking heat from that, it was a sea of red all across. In fact, it was a good 600-point knock that you saw on the Dow overnight. The S&P as well was down nearly about 1%. And the Nasdaq definitely got a little bit better of a move thanks to shares from the technology space and Nvidia in particular. But Asia, that's really taking the heat from the US handover overnight. Japan, as we speak, is down about almost 500 points. And across the board, you are seeing cuts of about 1% come by. Shanghai, of course, is more resilient, much like what our Nifty implied open indicates. So I guess right now, our markets are in a kind of own trajectory. I don't know if we're going to fall 1% in line with what Asia and US has done.
Yeah, last couple of days, like you said, that we've charted our own course.
Yeah.
The script of how Indian markets have moved has been a function of the FI positioning and the mood on ground in terms of the election cycle. So the script of how Indian markets perhaps would move also for next couple of days, I think would be independent of what is happening in the world. Until and unless something scary happens in the world, I think the Indian market is likely to move independently of what is happening in the world. Now let's just spend a minute here. I think for me, this is the most important aspect. This is the lay of the land or the setting of the table. Foreign institutional investors yesterday were net buyers to the tune of 4,600 crores. But they are still big net sellers for the year. I'm talking about cash market. And on the month to date, which is only in the month of May, the sell number is at 33,000 crore. Now, even worse is not the right word, but the positioning in the F&O market till Wednesday was extreme shorts. And we've been talking about it. Kunal and me have been flagging about it on a daily basis, that you've seen the kind of short positions we've seen in the last 10 years. So for the FI community, everybody was on the same side of the boat. Whatever may be the underlying factor, flows moving out of emerging markets, hedging the portfolio ahead of the election risk, or a view on the market. But the positioning in the market was extremely short and everyone on the same side of the boat. But few things have changed in the last couple of days. One, that RBI dividend, which is an endorsement that there would be enough and more cash surplus in the economy. The macros will start looking better and government will have, irrespective of the government, they will have ability to spend. Second, the mood on the ground has changed, both in terms of the perception where the election cycle would move and both in terms of the response what we've got post the polling post the last two phases of polling. That has led to a bout of short covering. Now, where do we go from here? Are we likely to build on this bout of short covering? Yesterday was just a one-day wonder. Second, will short covering move into long bias? Now, that is very difficult for anyone to fathom. But my trade is that when you see a sharp reversal like what you've seen yesterday, when extremities in the market or extreme positioning in the market changes, it is never a one-day wonder. I expect this trade changing, and when a trade which had become very large and one-sided trade, when it changes, it will not be a one-day effect. So it may really stretch itself for next couple of days. Now you could ask yourself is that for our viewers, what should be the election trade for them? We've been making this case that
seems like it already happened yesterday.
It may extend itself, but a smart election trade, and I'm just speaking based on experience and what I've gathered from market men, is that chase what FIs would be forced to buy, or buy what FIs would be forced to cover. And they're not going to be buying a lot of defense, railways, or infra stocks. They would actually be buying banks. They would be buying consumers, and they would be buying FI dominated stocks. So if you're really thinking contra, and if you're really looking at election, I think there is merit in doing that. Second, I think there's also some merit in taking some chips off the table, let's say on third or fourth morning, because everybody is now in a sense convinced which way the election cycle would move. So that trade is getting crowded, and the reversal should happen. You don't change your SIPs, you don't change your portfolio, you don't sell a small and mid cap stocks, you don't sell a family silver. But if you've just bought it for like a trade, and ये trade साल में पाँच साल में एक बार आता है, right? I mean, it is not like a happy birthday which comes one in a year. 5 साल में एक बार आता है. I think this should be the trade.
If you like this video, then like, share and subscribe to ET Now.